Meme stocks have been in the news lately, but what actually is a meme stock? It's when shares of a company quickly move in price due to the attention of a dedicated online following. To really understand this idea, we thought we'd look back at one of the most famous examples, GameStop.
GameStop's stock is surging.
Now, we tried to get Margot Robbie to explain it, but she was unavailable. So, you're stuck with me.
First up, for this story, there are three main characters you need to understand.
Number 1, GameStop, a struggling chain of game stores. Number 2, Wall Street Bets, a page on Reddit with 2 million subscribers dedicated to messing with Wall Street investors. And number 3, shorting, when you think a company is going to do badly, so you place a bet on the company's share price going down.
Now let's dive into what happened.
It was 2021, people were at home. GameStop were reporting pretty bad financial results. So many investors thought it would go bust, just like Blockbuster did.
So big investors shorted the stock. In other words, betted it would go down. If they were right, they would make a lot of money.
But if they were wrong and the GameStop share price went up, they'd lose. But there were people on Reddit who didn't want rich bankers to get even richer off the back of a collapsing company they loved. So they worked together to buy GameStop shares to make the stock go up. The investors were in trouble.
Dramatic increase. It's so unusual.
What exactly is going on?
But that wasn't the end of the story. Those investors who had bet on the stock going down then decided to buy into the stock before it kept going up. At this point, the share price just kept skyrocketing.
One of the most volatile weeks on Wall Street.
Social media average Joes versus big money players.
People on Reddit made a lot of money. For example, if you bought 100 GameStop stocks at $40 and sold them at $160, you would have made $12,000.
It cost traditional Wall Street hedge funds a ton of cash.
Investors who shorted, they lost a lot of money.
In the end, this is a typical David and Goliath story. Huge investors got beaten at their own game by some online traders sitting in their parents' basement working together.
If you are going to try to destroy a company by shorting 140% of its stock, you have to accept the fact that individual investors are playing the same game that you're playing and now you're losing.
This is going to be an excellent case in future business school classes.
That internet thing, it's pretty powerful.